going to do a video on S&P 500 technical analysis, and we'll take a quick look at the S&P 500 E-mini futures contract. We've got it up here from the Chicago Mercantile Exchange. This is a daily chart with a 5-day moving average in green, a 20-day in red, and a 200-day moving average in blue. We take a look here. This bar is Friday, October 14th, and in a minute we're going to show you prices for Monday, October 17th, some algorithmically generated entry prices. Let's take a quick look and see what's going on with the S&P 500. We've got a bear market starting back here around in April of 2022. Been consistent in a bear market since that time. You can see it bounced off on August 16th, the 200-day moving average, and promptly sold back down here and put in a new low on the 13th, Thursday of this week at 35.02 for the S&P 500 E-mini futures contract. So basically, we've got a downtrend, a bear market. We're under the 200-day moving average, under the 20-day moving average, and flirting with and currently under the 5-day moving average. So what's the weekly forecast for this SP 500? Well, there's several things going on. As you can see, our volatility down here is dramatically increased. Let me expand it a little bit so you can see it a little better. The volatility down here very recently, you can see the bars have gotten much wider across the board here, 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 and here. So we're starting to get a lot of transient activity, people coming in saying, hey, maybe there's a bottom here. And there may be a bottom here. But I will show you in a second on a weekly chart why it's highly debatable whether it's a bottom. So the first possible scenario for next week is that we get a rally up here to about the 3,800 level. If we get a rally to the 3,800 level, we're going to get a lot of people stepping in here trying to short this S&P, because the recent swing high is about 38.20, as you can see here on the 5th of October. So we're going to get a tremendous amount of resistance up here if we start to get a rally around 38. Now, if we blow through 38, and it's easy for this S&P 500 to do that, but if we blow through 38 to 3,900, then this bear market decline is probably over. But if we don't do that, if we come up and we flirt and say we get to 37.80s, 37.90s, and promptly sell back down towards the end of next week, then that means we're still in a bear market in the S&P 500. Again, if we get a rally and we blow through this 3,800 level, this 38.20 level, this resistance up here at 38.20, and get to say 38.75-ish next week, and we're at that point, we're above the 20-day moving average, above the 5-day moving average, and we close up there, then we're probably going to continue on in the next few weeks, probably by this first or second week of November, and run into this 200-day moving average again, just like we did here. And this time there's a much higher probability we'll close above it. So that's the upside scenario. Let's take a look at the downside scenario real quick by switching to a weekly chart. This is a weekly chart, 200-day moving average in blue, 200-week moving average in blue, and you can see that the next support level down here is right here, and that's from back in September 2020. That's at 31.98. Let's call it 3,200. We're currently closed. This week's low is 35.02, so almost 300 points down. Also, you'll notice that we broke through, similar to down here, we broke through the 200-week moving average. So that's not a good sign. You'll notice right here, we had a slight little break, but we rallied. We've had a significant break. I wouldn't say a hugely significant break, but a significant break, and we closed right, almost right on it. The average is at 35.95. We closed for the week 35.97. We closed just above it. So if we get down here next week, down to the 34s, say the low 34s, 34.50, 34.25, that's an extremely negative situation for the S&P 500. So those are the two scenarios we're looking at on a weekly basis for next week, for Monday, October 17th, and the week following. So a rally to 38.20 and beyond, maybe we're going to be done with this bear market. A decline down here, 34.50, 34.25, that probably means we've got much more ground to cover, and probably down to 3,200 before we catch some support on the SP 500. Let's go back here and take a look at what RBAM Research says for Monday the 17th with algorithmically generated prices. I'm going to show you two different sets. This is our trend following system. We've got a 30-day hold, which basically means get in Monday, get out at the end of 30 trading days, worst case, and take a loss, or take your profit sooner if you get it. You can see the E-mini ES is the symbol from the Chicago Mercantile Exchange on the futures contracts. So there's a short for Monday at 36.97. That's, of course, for entertainment purposes only, and you have to use your own analysis. But that's what this system is showing, a short at 36.97 for Monday morning the 17th. If we go down here and take a look at the non-trend following systems for SP 500, 17th, Again, our symbols ES for the S&P 500, 1, 2, 5, 10, and 20-day hold periods, and it's showing buys at 35.60 all the way up to 35.78, hold periods 1 through 20. And again, these are trading days. Get in on the initial day, get out at the end of the prescribed period just before the market closes, and take your loss or take your profit as soon as you get it. That's the way these look. So again, a short position up higher, buy positions down lower, depending on what happens with the markets on Monday. These come out every day and change every day. These are for Monday, the 17th of October. You can get access to all of this every morning before 7 a.m. at rbamresearch.com. In addition to the S&P 500, we cover crude, gold, and bonds for the futures, the major forex pairs, BTC, crypto, and 190 plus stocks. You can get them all for free. Absolutely no credit card required. There's a link in the description below. Follow us over to RBAM Research and just put your email address in there and get them for free. Keep in mind, everything you've seen in here is for entertainment purposes only. Can't use it for anything other than entertainment. You always trade at your own risk, and you should always use the best analysis, which is your own analysis, in my opinion. If you like this video, please click the like button. If you want to subscribe, please do that as well. And if you have a great comment for us, please leave it in the comment section below. We'd love to hear from you.